There's a lot of myths in reverse mortgages and what I call retirement mortgages because, again, a lot of people just believe what they've heard to be true. And in many cases, it's just not. So number one, I would say the number one myth is that you give up ownership to your house. And that's just completely incorrect. You still own your house, you still have title to your house, and you can still pass your house on to your heirs. And if at some point in time you decide that you want to sell, you can still sell your house. That's the number one myth and misconception that I would say still exists today. Number two is that you give up the equity in your home. That's just incorrect. If your home continues to appreciate in value, that appreciation is you're not losing that appreciation. That's yours. That's yours to utilize, or that's yours to pass on to your heirs. Okay, so you don't give up equity or the future appreciation of your home. Okay, number three, I tell all clients on the education piece of reverse mortgages is that you're simply not required to make a mortgage payment. It's not that you can't. It's not that the loan balance is automatically going to grow, but it simply gives you the option. You see, a reverse mortgage gives you more options and more flexibility than a traditional mortgage. Because a traditional mortgage requires that you make monthly payments until you pay the loan off. And the reverse mortgage simply says, if you want to make payments, great. If you don't want to make payments, you don't have to make payments. Okay? Number four thing I would say is one of the larger myths out there is that at some point in time, if you end up using all of the equity in your home because you live a very long life, that you lose your home. And that's simply not true. You see, there's a couple requirements with reverse mortgages, and that's you have to continue to pay your property taxes, number one. Number two, you have to continue to maintain homeowners insurance on your property. And number three, you have to continue to occupy the property as your primary residence. That's it. As long as you continue to do that and maintain your home, you never have to worry about making a mortgage payment or paying the loan balance back. And you can continue to live in the house and use all of the equity in the home, and you'll never be required to repay that loan for as long as you live in the house, continue to pay your taxes and insurance, and maintain the home. So you see, the reverse mortgage really is not that different than a traditional mortgage because you still own the house, you can still sell the house, you can still pass the house on to your heirs, you can still continue to gain appreciation. The biggest difference is you don't have to continue to make mortgage payments. So instead of paying the lender every single month, you're simply not required to. And if you don't, the interest is deferred for a future date until you pay that loan back.